Oren Cass, welcome to Dad Saves America.
Thank you. It's great to see you.
It's good to see you again, my friend. So we met, gosh, many years ago. You came into Austin gave a talk with our mutual friend Ovik Roy,
Yes.
and then we had dinner together. So we have met before, and we've debated before over dinner, over
Right.
China of all things. So um, you since then founded American Compass, a conservative think tank with a decidedly different slant on economics than has been traditional conservative orthodox economics. Um, and I'd say you, in many ways, are one of the leading voices of what's been called the new right. Now, I think there's multiple new rights
Yes.
going on, but how would you position what you're doing with American Compass and how you view your goals, your mission, like what you're trying to do?
Sure. Well, I will take that invitation to start with literally our mission, which is to restore an economic consensus that emphasizes the importance of family, community, and industry to the nation's liberty and prosperity. And how I see that fitting really into the ideological battles that are particularly going on within the right of center is that it's funny you were saying that we sort of are very different from the traditional orthodox conservative view. We see what we're doing much more as a restoration of the traditional conservative view. I think during the formation of what was called fusionism, we think of it kind of the Reagan coalition when you brought together the much more free market libertarians with the social conservatives and the Cold War hawks. That was a very effective coalition for winning the Cold War, but it imported a libertarian bent to economics that certainly aligns with conservatism in some respects. I certainly prefer free markets and private ordering to state control as much as the next guy. But it also brought in some things that I would say are not necessarily conservative at all, and that introduced real tensions between market forces and the interests of families and communities. For instance, difference between, I think, the libertarian free market view tends to be much more global in its orientation, whereas I think conservatives take much more seriously the importance of national identity and solidarity. I always point out, Hayek has a very famous essay called "Why I Am Not a Conservative," and so our view is that I think there are a lot of value to a lot of the libertarian perspective. I think also on public choice and thinking through not what's your ideal policy, but what can government actually accomplish. That's an incredibly important strain to always have running through conservative thinking. But then we in a way sort of want to put markets back in their place and say markets are an incredibly important means, but they are not the ends, and that there are ways in which markets advance human flourishing, but there are also ways in which they don't, where we might want to keep them at bay. And that markets don't automatically advance human flourishing, that under some conditions they will, and under some conditions they won't. And so we actually need public policy to play a much more attentive role or attentive view to, uh, you know, how are markets working, what constraints do need to be in place so that people pursuing private profit are also advancing the common good.
All right, I'll keep this quick. If you love what we're doing here at Dad Saves America and don't want to miss it, be sure to hit that like button, subscribe to the channel, and ring the notification bell so you won't miss our new videos as they drop each week. We've also got plenty more content and supporting research over at dadsavеsamerica.com. So please go and check that out. It's also a great way to keep up with what we're doing over email if you are worried that YouTube might be censoring your access to us. One other note. This is trade week here as we're grappling with the Trump administration's dramatic changes to the world order as it pertains to global trade. And so we actually have two episodes happening today that is very unique for us, one of which is this one with Oren Cass. And as we were filming this, President Trump announced the 90-day pause on most of the tariffs outside of China, which he actually increased. So just keep that in mind as we're talking about the current events. But most of this conversation is a broader engagement with the issue from Oren's perspective. And so let's get back to it. I think that's a great summary. And I think in large measure, our conversation is going to be about probing into that, starting with where we sit right now, which is last week, President Trump enacted
Announced.
Announced Liberation Day, right, on Wednesday, a broad-based, I would say, assault on the global economic order as it exists. It is of a different kind than the first Trump administration's efforts around trade. He really went hog wild. 10% across the board tariffs on everyone, every import. And then he called the rest something like reciprocal tariffs, although I think the question of whether they're reciprocal tariffs is up for debate, let's say. You wrote an op-ed in the New York Times, which went live yesterday as we sit here. And I want to read a little bit from it and dive into the arguments you're making in that piece as a starting point, because we are sitting here. I'm not sure where the markets are right now as far as the stock market, but they're not great. And I don't think that's an argument to be made for this or that policy. Markets don't like change. So sometimes change is good. Markets don't like change, whether it's good or bad, generally. Okay, so you wrote in the New York Times, last week's Liberation Day marked a kind of D-Day in the effort to reorder the international economic system. That reordering is desperately needed to address the system's imbalances, which have led to de-industrialization and annual trillion-dollar trade deficit for the United States. Lay out your understanding of where we are with this new world order that President Trump is trying to build.
Yeah, I should say, I obviously I agree with your assault assessment, leading with a D-Day metaphor myself. I think what we've seen the Trump administration talk about, and this is a key strain of thinking on the new right generally, certainly something I agree with, is that the so-called liberal world order of essentially the post-Cold War period is over. And I say that as a descriptive rather than normative statement, because we can get into the normative. I think it also should be over. I think it has not been serving the United States well. But I think, frankly, whether we want it to continue or not, the reality is that the US is no longer a global hegemon. We are moving into a multipolar world in which China is going to be a peer competitor and adversary in all sorts of respects. And in parallel, the US's own strength in various ways, I would say, is not just in relative but absolute decline. And that's hard to see if you're just looking at the GDP statistics.
Mm-hmm.
But I think if you look at the actual sort of national capabilities, we have seen very serious erosions in the basic foundational elements of national strength and well-being. And one example that I always point to that I find just so striking is that if we think about post-Soviet Russia, and just the level of sort of decay that was seen there, and it's often associated sort of with deaths from alcohol abuse. If you look at that death rate from alcohol abuse in the first decade of post-Soviet Russia, we are at that level now in the United States in rate of drug abuse deaths. That's the level of social decay that we've seen. And I think with that has gone, a real breakdown in solidarity. Just generally speaking, we obviously see that in our politics. I think that plays out all sorts of ways in our ways to project power if we wanted to around the world. And so both because we couldn't be the hegemon if we wanted to, and because we have been facing a lot of these breakdowns, it's really important for the United States to stop and ask, okay, what do we need to change? And if we are moving into a different world, what do we want that world to look like? You can read a lot of different things in what different members of the Trump administration say at any point in time, but my best read, and I think it's sort of the one best supported by certainly what Rubio, what Vance say, what Scott Bessent, the Treasury Secretary, what Stephen Miran, the chair of the Council of Economic Advisors, would say, is that essentially, we believe we're moving to a system where there will be a China-centered bloc and a US-centered bloc. And we need to think about what our demands are for participation in the US-centered bloc, because it's not just going to be the US is here to preside over an open system for the good of all. there need to be some conditions. And what the US probably wants most is three things. One, we do care about balanced trade, and I'm sure we'll get into why, but
Yeah. Yeah.
that trillion-dollar a year trade deficits are not good for our economy. We would love to have high levels of trade, but it needs to be balanced. Second one, we want to see much more burden sharing, or I would even call it burden owning on security. That means, everyone is first and foremost responsible for taking the lead on defense in their own areas. And third, that we want China out. That for this to work, we are all going to have to agree that we sort of hold hands and maintain a uniform barrier against Chinese, trade practices, investment, and so forth. And so I understand what the administration is trying to do as sort of force a shift in that direction. And essentially with the reciprocal tariffs in particular, say the old "it's open no matter what" is over. The default would actually be quite high tariffs that say you are out of the zone, but we have a set of demands. Please come to the table and let's get you back in the zone, basically. And that is the direction. We can obviously talk a lot about how well that is being executed on, but that
Yeah.
I think that is the organizing principle.
You note, and I think I want to, as part of this conversation, try to disentangle, which in a sense is the goal, right? Disentangle China, and you've laid this out just now, that there's the China question, and then there's the rest, or the West, let's say, or however we want to think about what these blocks are. One thing I will say, so my biases are in the other direction. I'm very libertarian minded. But what I have found challenging in the times that we are in, especially since 2020, since COVID, is you touched on something at the start there that is powerful. And that is that there are very serious things that have taken place in our society, and trends are not just the level of alcoholism, drug abuse, fentanyl deaths, etc., but the breakdown of the family, the collapse in religion, although there's a little bit of an uptick going on right now with Christianity in particular, which I'm happy about. The there's something like elements of decay that I think we can all feel. And I think one of the interesting questions and challenges is, can these be thought of in distinct ways? Because it can be a little bit of like a socialization of responsibility, blob of problems, and therefore my solution that I like, whether or not my solution I like has anything to do with the problems. Like, does trade imbalances have anything to do with fentanyl deaths more broadly? Yes, you can go to, say, a steel town or a coal town in the Rust Belt. I'm from Allentown, Pennsylvania. Sure, but that's not the only thing going on, and that might have happened anyway, and it's more complicated. So I guess before diving into some specifics, just as in general, how do you connect that statement to trade? How do you connect America's problems, our fiscal deficits, our moral declines, to the extent that's happening, to trade? Because it's not obvious that trade should be held responsible for any of that necessarily.
Yeah, well, I think it's a great question, and I should say I agree entirely that trade is not the only issue here, right? And that nor will fixing trade fix the issue entirely. And probably a whole different podcast to talk about some of the other, family
Yeah.
policy, education policy, right? Like there's
Yes.
all sorts of things that I think, and frankly, even to make the trade policy work, we have to get some of that other stuff right.
I
But I
mean,
do,
one just example real quick is just, and I want to come back to this,
yeah,
the 7 million unemployed prime working age men is an issue I want to put a pin in, but it's one of those indicators that is often, you've talked about it, others have, Vice President Vance has, and even that one isn't necessarily going to get solved per se, or I want to hear how you think about that. But roll that into it, because that's a big part of it too.
yeah. No, it's a great example. And so I think, where I do see a nexus, and I think this is important, is that my assessment of the data is that we have seen a significant deindustrialization in the country. And even this is debated. There are those who will say, well, manufacturing output hasn't actually fallen. And I think that's right. It has, roughly speaking, flatlined since 2006 or so.
Yes.
Unemployment in the manufacturing sector, after being constant over waves of automation for decades, fell by a third very quickly after we welcomed China into the WTO. And the consequence of this, I think, even before we get to the trade deficit balance question, is essentially an imbalance in our domestic economy. That is, to have manufacturing flatline, even as and sort of industrial output overall flatline, even as we've had what we hoped would be very healthy GDP growth overall, speaks to the fact that we have gotten a particular type of growth. We have seen a disproportionate share of growth come in those high-end services, in knowledge work, in some areas geographically, but not other areas. And related to that, we've seen what I would call the sort of financialization of the economy, where the profits in the economy are increasingly tied to financial activities rather than actually deploying real investment in the real world and building anything. And again, the building anything element of that there isn't important because I have a nostalgic love of tightening bolts or something. I mean, much more broadly, just at the level of if you want to make a lot of money in America, is the way to do that to actually start a new business that creates a valuable product and employs a lot of people productively. And there was a time when that was absolutely the case, and that's what the top students went from the top business schools to do. And today it's not. Today, if you want to make a lot of money in America, if you want to do it in manufacturing for the past 20 years, you've done it by offshoring the manufacturing. Or you become a consultant and do it by cost cutting and rationalizing, or you do it by going into a financial firm and buying the existing asset and chopping it up and repackaging it. Or you do it by going to venture capital and technology, which overwhelmingly is not actual sort of innovation, I would say, so much as the development of social media apps to a significant extent. And so again, even within this narrative, deindustrialization is just, trade and it is one element, not the entire thing. But I think trade is a really important element here. What we said when we really embraced globalization, and especially free trade with China, was we are just going to open up this option of produce the things we need here without using workers here. That was a constraint that was always inherent to capitalism, and we just threw it out. And the theory of trade, or you go back and listen to the economists selling this, was that trade would be balanced. You will never hear an economist or a politician say to the public, free trade is going to be great because we're going to take all the stuff we used to do here and send it overseas, and get no other and not actually have any new opportunities to sell things to those countries. The case is always other countries will do stuff they can do better. We will do stuff we can do better, and we will benefit from being able to sell to them. And we just abandoned that. We said, actually, this is fine. If you can just make more money moving the production elsewhere, do it. And we will trust some other kind of job to come in and fill the gap. And that just didn't happen. There's actually very good research. David Otter, who did the China shock research, he and his colleagues just published a new paper called People versus Places that looked at what actually happened in labor markets. Because of course, other jobs did come to replace the jobs we lost. But the jobs that came were of two types. They were of good high-skill service jobs for more highly educated people with a different set of skills. And then they were much lower quality service sector jobs that were not as good as what a manufacturing job could offer. And so I think in just the basic shape of our economy, what we effectively did was embrace an imbalance that maybe at least for a time optimized GDP, but did not spread prosperity broadly and really left a lot of people behind. And the trade deficit is the symptom of that. It is what tells you that something went wrong. Because if we had done all this and a whole bunch of things we used to make went to China, but a whole bunch of stuff other people used to make came to us, and we traded the stuff we could make for the stuff that others could make, none of this would have happened. It's the fact that we stopped making the old stuff and didn't start making new stuff that that is at the core of the problem, I think.
So I want to start to break that apart and break it down. And the way I'd like to start is, and you've touched on this a little bit. What is your, let's say, steelman version of the case for trade? And you could even say it beyond just, between countries, between states, just trade in general, because there's a certain logic of buy local that there's no reason to just apply to international. You could say, well, if I'm in Texas, I should buy Texas products, not California products. Like the drawing of the lines, they matter for politics, they matter for a lot of things. But the economic argument of the benefits of trade, how do you understand that? What would be your just make the case for it so we can have a baseline that we're on the same understanding of what that is? Because I think I frankly, uh, it's not that intuitive, actually. And I think the public in general, and this is not to be down on people, doesn't necessarily know how to articulate the benefits of trade. So how do you think about that?
Well, I guess it's interesting. At the most basic level, it seems to me that the case for trade is very straightforward and something that people do understand and appreciate in their own lives, which is that nobody wants to make everything for themselves, right? That if you tried on your own farm to grow all your own food, and
Yeah.
like I guess you have to question, where do you get the seeds and the fertilizer from, and are you building your own tractor, and so on and so forth. That would be a really inefficient and unpleasant way to live, and you would end up with very little.
Yeah.
But that if you have a situation where different people, and again, even just at the individual level, people can specialize in different things, and come together in different combinations, the total amount that you can produce is going to be a much higher, and there is therefore much more output that everybody can consume. And so I think to a significant extent, just the basic case for trade is that simple.
Yeah, I think my good friend Russ Roberts, and this is a flippant econ joke, but he says we tried buy local. It's called the Middle Ages, and the the most obvious example, and free marketeers will point to this all the time, is look. You don't have to go that far back to your point to have something like 40% of American workers were working in agriculture on farms, and that today that number is roughly 2%. And that's generous because that's including a lot of people who aren't farming per se, but they're part of the supply chains and whatnot. So from 40% in say 1920, or let's just round it off and say 1900, to 125 years later, 2%. If you go back in time and tell the American public that in 2025 only 2% of Americans will be farming, they would say, well, what are we doing? It must be a depression. There must be mass unemployment. And we would have to explain, well, no, they're doing things like making apps and working in factories on products and technologies that you don't even know exist and are incomprehensible and frankly will look like magic to you in 1900. So the disruption, the dislocation of innovation, of automation technology, because that's what really the story is, right? It's automation. It's the tractor. Automation is as disruptive to a lot of the things we're talking about as um, buying it from somebody else. So how do you grapple with that dynamic versus the trade story when it comes to things like communities and employment and solidarity? Because both do this, both move our cheese.
Well, I think we've skipped ahead a number of steps from the individual reason that we like the ability of people to trade with each other to, what is the problem with the disruption caused by the WTO. And so
Sure.
it's probably worth sort of disaggregating a few steps there.
Yeah, please do.
So I want to come back to the automation point because I think it's a super interesting one. But if I can pin that to the side for a moment, I think what happens as you go from well, look, that's great, people trade with each other, up to the way that the international economic system works is a few things. Um, One is, okay, even let's talk about trade in an international context. There really was a concern for a very long time, and this is what I think is less intuitive to people, that we can find useful trade even if one country is better at everything.
Yeah, this is
Because it's
comparative
important
advantage.
right. It's important to say that one way that that point about individuals breaks down is like, okay, well, once I have a country of, 300 million people, there's an awful lot of specialization that can go there, that can happen therein, right? The
Hmm.
case that like, oh, well, I wouldn't want the United States to have to grow the food and make the track. Like that starts to break down. You say like, I don't know, that sounds like a lot of things the United States could do. And then when you look out beyond that and say like, okay, but you want the United States to be able to trade with potentially a much poorer country that is more productive at nothing, you start to look and say, well, how is that trade supposed to work? And the key insight of comparative advantage was essentially, well, even if you're better at everything, there are still some things you're relatively more better at, which,
Yeah.
which is a clunky way of saying it, but is essentially the insight here, that there are still some things that it would be better to concentrate more of your effort on because you can produce more output there, and rely on somebody else to put more of their time into something that they're relatively better at.
I
And then
mean,
you'll
one way to,
still have
yeah,
more stuff you can trade with each other.
one way to just, I'm thinking through this kind of in real time at the personal level. I think we do experience this form of comparative advantage, right? Because uh, all of us are better and worse in different parts of our job, let's say. And there are instances where, hey, I am better than my, let's just say, my coworker at X, but I am more better at Y. And not only am I more better at Y, but Y is higher value. So the time I'm spending on X, even though I'm better than Joe at it, is time I'm not spending on Y. So it's I think in a lot of ways maybe comparative advantage is best understood as a question of opportunity costs.
Yes.
Like the unseen cost of me doing X instead of you, even when I'm better than it, is I'm not doing Y, which is higher value. And so I'm going to let you do X and fumble around and not be quite as good as me, but we are better off because it's like me focusing on Y creates more value for everybody, for the society, for our customers, for me, whatever that might be. Is that, you think that's a fair kind of way to
Yes.
think about it?
Yeah, it's a great example. I think it's funny in my line of work, I think about like, why would someone want to have a research assistant? Can't they surely do even the basic research tasks better than the research assistant could? That's a silly question. Obviously, it still makes sense in many contexts to have somebody that's helping you with some of the work. Um, and so, so that insight is super important. And
Yeah.
when it was first developed back at, the beginning of the 19th century, it helped people understand why, the classic example is, okay, England can specialize in cloth and trade it for wine from Portugal.
Right.
And that is the case even if England hypothetically could do wine and cloth better than Portugal can. Now you start to realize like, well, that's actually kind of a weird example. England can't do wine better than Portugal.
Sure.
But for purposes of the illustration, it was, for the British in particular, which were the sort of leading industrial power, to understand, no, 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 it still is good for us to be able to trade with these other countries, was really important. It's important also, though, to emphasize that in constructing that model and showing that both sides benefit from this trade, there are some really strong assumptions built in. One of them, and David Ricardo is the one who initially introduces this idea of comparative advantage, literally on the same page where he explains this example, he notes, of course, this requires that capital is immobile and business people prefer to invest at home domestically. He says, in Portugal, where labor is so much cheaper, if the English cloth manufacturers could just move to Portugal and make the cloth there too, then obviously this model breaks down. Now, we could have other debates about other ways maybe it would be good for that to happen. But the
Yeah.
basic case for comparative advantage assumes that you have the factors of production and the capital and the labor in the two places, and you're deciding what to allocate it toward. And so that's, I think, then connects to this point about balance, that I think trade is great. It would be fantastic to have a situation where you have high levels of trade between two countries that are specializing this way. And I don't question for a second that both countries would benefit as a result. The two problems that we've seen in the international system are one, in what kinds of comparative advantage we're talking about, and then two, whether we see comparative advantage actually operating at all. And so, not to belabor these, but just to note them
Yeah.
briefly, the theory of comparative advantage kind of assumes you're talking about natural endowments where there's a reason for a country to be better at something. You have, different agricultural, climate and geography and so forth. If you look at international trade today, that's not what we're trading. And to the extent that it is, trade is quite useful. Most of trade, of course, is manufactured stuff. And it's not nearly as clear what the comparative advantage there is. So, for instance, Taiwan doesn't have a comparative advantage in advanced semiconductor manufacturing because of the Taiwanese soil. They have it because the Taiwanese government pursued an aggressive policy to support both the engineering skills and the capital investment in advanced semiconductor manufacturing. And so you end up with a situation where if some countries decide, okay, here are the really valuable things we want to be good at, and others just sit back and say, well, we just support a free market, all the really valuable stuff that people really want to be good at ends up concentrated in the countries that do that stuff. And the United States is a country that said, we don't care what we're good at. The famous economist has famously said, potato chips, computer chips, what's the difference? You can end up with, even if trade is balanced, still very strange skews in who is making what. And then the second problem is that the requirement that trade be balanced has been released because of particularly the advanced financial markets that we have, the way that multinational corporations operate. It is in fact the case that you can make both the cloth and the wine in Portugal, and you can suggest that England just issue government bonds to the Portuguese in response. And that does let you drink a lot of wine and wear a lot of clothes in England, but that doesn't mean it's actually going to be good for the English economy in the long run.
I want to make sure I understand and the audience understands. When you say balanced trade, what do you mean exactly? Because as I understand it, trade is, in a sense, always in balance in that we run a trade deficit, which is to say, in the United States, we manufacture something, we export something like $3 trillion of goods and services, and we import roughly $4 trillion. That was a ballpark of 2024. So we exported $3 trillion worth of stuff that we made to other countries. And we imported $4 trillion, which means there's a $1 trillion worth of money that was sent out. That's the trade deficit. But that money is US dollars. It ends up coming back into the US as a capital surplus. And that's how I understand, like, the trade is technically always in balance, but that can't be what you're talking about. So when you say trade is, we need to be more balanced, what do you mean? And how do you think about the capital account and investment surplus that comes about from the way things work now?
Yeah, so that's a very important clarification. When folks talk about trade deficits, they're usually talking about the current account, the actual balance in goods and services. And then to your point, the capital account, the flow of money has to, and assets has to balance that, essentially by definition. I mean, in the short run, you could imagine, like, we buy stuff with dollars and they just put the dollars in their mattress. But for all practical purposes, what you have happening is, yes, they're not sending us stuff for free. They do want something back in return. And what they are taking back in return, instead of things that are produced in the United States, is they are taking back assets. And asset is another one of those terms that can be confusing sometimes in lay discussions, because well, like, my car is an asset or my home is an asset, right?
Yeah.
Assets, generally speaking, well, real estate actually is a significant one here.
Yeah.
But corporate equities, so ownership of companies, is an incredibly important one. And then debt is actually an asset. So when a corporation or when the US government issues a bond and basically writes, it is a piece of paper that says, we will pay you someday, that's an asset that is valuable to hold. And so, this is why I mentioned in the English and Portugal case, what if Portugal makes the wine and the cloth and England issues government bonds, right? The way that the trade ends up looking, you would see a large trade deficit. Portugal sells wine and cloth to England. England makes nothing that it is selling back. But then on the flip side, you would have that capital account going the other way. Portugal is what it is acquiring from England is government bonds. And so in effect, that's what we've seen happen with the US. So to your point about that $1 trillion a year gap, what that reflects is on the flip side, $1 trillion a year of assets is shifting from US control to foreign control. And there are two ways to look at that. Because you said economists who want to celebrate this call this, they call it investment. They say, well, this is good. The United States needs more capital. We want foreigners investing in the United States. And wouldn't that be great? Or isn't that great? And I think it's important to say that it could be great, right? Let's say that all of that investment was coming in and building new factories in the United States.
Yeah.
That would be terrific.
If Chinese people who have received dollars because they work at Foxconn manufacturing iPhones turn around and invest in a new IPO for a company that wants to expand its capacity and needs the capital to do so, that's a win-win-win because now customers have more goods, the company is growing. Yes, those Chinese people that work at Foxconn own a share of it, but the incentives are all aligned. More or less, everyone could be better off in that.
That's right.
And,
or to be even more concrete, let's say, the US is running a huge deficit with Japan because Japanese autos are flooding the US market, and Honda and Toyota take those dollars and use them to build the Honda and Toyota supply chains in the American South. That's terrific. No objection to that type of investment at all. The problem is that very, very vanishingly little of the foreign investment coming to the US is actually deployed and in that way. And this goes back to my point also about deindustrialization and financialization, where in general, in capital investment, when we say we're investing when we buy a stock, but you're not actually investing. You're not causing any investment to happen in the real economy when you buy a stock. You're trading your cash for somebody else's stock certificates. Your IPO example is different. IPO actually sends capital to a real company. But that's again a vanishingly small share of activity in financial markets. So overwhelmingly, what's happening is that the U.S. is trading its existing assets, so ownership of companies that have already been built, ownership of real estate, and then a lot of government debt. And so we are and there is then one additional problem with that government debt, which is you could imagine a world where, the US government is borrowing a lot of money to build incredible infrastructure and chip plants, whatever. No. Right? It's not. It's using that borrowing to fund entitlement payments, which at the end of the day are consumption. So whereas the economist looks at this balance and says, we're getting this foreign investment, in fact, we are not. We launder that in a sense into more consumption. And so if you actually want to think about what is the trade that's going on, the easiest way to think about it is once we kind of net out all the money flowing around, we have foreign countries sort of sending things into the United States for people, who are receiving a lot of government benefits to consume, in return for which the government is sending back pieces of paper saying, we will pay you for this someday. And that, I would argue, is not a healthy trade at all.
This is the piece of the puzzle that I have struggled with as someone who is very much you could say, doctrinaire free marketeer. And that is, how can it be good to be selling our kids' future, period? And I guess one question I have for you on this score is how much of that is a function of the trade deficit versus just a function of having a profligate, slob, irresponsible government that can't keep its house in order. And I guess I will add my own version of the answer, which is the nature of politics seems to be that you only get your house in order when you're forced to externally. So we've seen many instances of this Canada in the 90s, the Scandinavian countries in the aftermath of their financial crises, basically smaller countries that don't issue the global reserve currency get their hands slapped by international markets. And it almost doesn't matter with left or right. Like in Canada in the 90s, they were running deficits, fiscal deficits. And as I understand it, a left of center government did austerity, tightened things up, and basically went more free market and more fiscally responsible because they were risking not being able to like sell their bonds. We seem to be able to sell our bonds come rain or shine, and frankly, if it's rain, people want to buy our bonds more because they're considered a safe asset. So how do you think about the relationship between the trade balance and just government profligacy? It doesn't seem like it's a one-way street. At a minimum, it seems like it's a bi-directional feedback loop. But how do you think about what thing dominates?
It's a great point, and I think describing it as bi-directional is exactly the right way. A point that we at American Compass emphasize a lot is that, in fact, you're going to have a very hard time closing your trade deficit if you are running your $1 trillion trade deficit if you are running a $2 trillion budget deficit. And that getting that budget deficit, one of the reasons to get that budget deficit under control is because that budget deficit creates this enormous demand by the US government to borrow in this way. And so we can't really complain entirely that other countries want to buy our bonds instead of our manufactured goods when we are desperately screaming, here, please buy more of our bonds. And so that is absolutely part of the problem. It has to be part of a solution. But it is both not the entire problem in that obviously a lot of these other countries are pursuing aggressive policies of export-led growth that relies on high surpluses, not just China, Germany, Korea, Japan. That is the economic strategy of these countries. They adopt policies based on it, and then it happens. And so we shouldn't sort of like shrug and go like, well, that's a coincidence, or say like, well, that wouldn't have worked at all. They're sure lucky that the US is running these big budget deficits, right? There is obviously pressure from the other side as well. And then the other thing I think is worth noting is that the tangle is actually just a lot tighter. It's not just, okay, well, these pressures are pushing in both ways. It's also that I would argue one of the real reasons we face some of the fiscal challenges that we have is that we have hollowed out substantial parts of the productive economy and shifted to an economic model that is not deploying a lot of productive investment. That if you think about, okay, what is the equilibrium we would like to shift to? The idea is to say, well, we would like to be deploying a lot more investment domestically in actual productive activity that would in turn address some of our fiscal problems, right? It's sort of a quintessential supply side argument that to some extent there is a way to grow out of part of our budget deficit. But the way you do that isn't to just cut taxes and then wait. The way you do that has to be in part to recognize the way that the trade imbalances, again, flow into the fiscal picture, just as the fiscal picture flows into the trade imbalances. And that actually a push toward reindustrialization, I think in the medium to long run, is part of just a broader solution to the fact that Americans consume a lot more than they are able to produce.
One of the things that I think is so difficult in trying to even think about where to go next is how interconnected so much of this is.
It's a messy conversation. Well, I'll remind you, we have the automation piece pinned to the side. Want to come back to that at some point, but whatever you think.
Well, I think one piece of the puzzle I do want to touch on is specifically China, and China relative to everything else. So you wrote on the website of American Compass. The holiday from history of the 1990s created a presumption that liberal market democracy was on the march everywhere, and globalization's proponents argued that incorporating China into a global marketplace would accelerate its own liberalization. And by liberalization, we mean freedom, democracy, American-style government in its best version, I guess you could say, not liberal as in political left. They were wrong. Instead, China changed us, corrupting the free market, distorting investment flows, capturing valuable industries, and even exporting its authoritarian politics through campaigns of economic pressure. And I think it is very much the case that that hypothesis that moving towards freer trade, where goods exchange, bullets will not, is one way this gets put. And that so far does seem like it's been held up, which is good. It's good not to have bullets, but the broader like pro-democracy, post-Cold War, America's economy will become the new shining city on a hill for democratic expansion and liberating people politically. That doesn't seem to have happened. In fact, it looks like democracy is in reverse.
Yes.
How else do you think about that? And is this part of the reason why we should disentangle from China? And maybe even more broadly, like, well, what's it to us if the Chinese political system is different? Like, okay, that's for them to figure out. We can still benefit from trade, even if Beijing is arresting people for their social media posts. I mean, heck, they're doing that in Scotland and most of Europe. So it's not like, are the Chinese even that much worse than us? It's not even clear. And I'm not saying that flippantly. But help me understand that.
I wish you were saying that flippantly, because yes, the Chinese are a lot worse. Whether we are talking about human rights or economic intervention or whatever, it is a very different situation. Now, your point that, like, look, we don't have to be best friends and love everything about the people we trade with is absolutely right. And I don't necessarily like an authoritarian country, but if a country just wants to be authoritarian, like, Saudi Arabia, you can still have a very successful trading relationship with them. The problem with the relationship with China is that I think it is essentially the Chinese system is fundamentally incompatible with the American one, both on the economic side and on the political side. And they're both tied to the same sort of original sin, which is that as an authoritarian communist country, the economy and the markets and firms, to the extent there are markets and firms, are ultimately controlled by the Chinese Communist Party and are seen as responsible for and accountable to operating in service to whatever the priorities of the Chinese Communist Party might be. And in economic terms, that creates an enormous problem, which is that the firms operating from China do not face the constraints of market logic. And so if you have an American firm that needs to raise capital from private investors and treat its workers well and generate a return on capital and so on and so forth, and you say, okay, thanks to our love of, quote, free markets, your success now depends on your ability to beat a company that is being supplied with slave labor and gets free capital and doesn't have to earn a profit. That's not a free market. It is a market in which those places where the Chinese Communist Party doesn't care, you can win, and those places where it does care, you will lose. And so it's really important to notice that whereas we tend to think like, oh, well, free trade is an extension of free markets. If I like free markets, then I'll like free trade. That does not hold here. The more that we have pursued free trade with China, the more that we have welcomed those distortions, the distortions of having a state-controlled economy into ours. And
how has that happened? Can you give me a specific? Because rhetorically, it's a potent story. But what does that mean that authoritarian politics have been brought to America by way of China? What does that actually mean?
Well, so the politics is bucket two. So I'll hit that in just a moment. But
sure.
On the economic front, very concretely, if you look at what has happened to a lot of the major American, well, the best example is look what happened to Tesla, right? I mean, why Tesla was a U.S. government funded, to some extent, crown jewel of American innovation industry. And China said, essentially, we're not going to let you sell in China unless you move your factory to China. And you're going to do it in partnership with the state, essentially. And, you're going to have to agree to this and that. And then we're going to, actually have a whole bunch of your engineers now go and start other competitors to you, using essentially your technology. And we're going to start causing various problems for you. And by the way, we expect to see you now using your Shanghai If you want to keep selling in China, not only do you have to make in China for China, we expect your Shanghai plant to be where you serve the rest of the world from. Tesla at this point is more a Chinese company than an American one. If you look at their key stakeholders in their stakeholder report, they will tell you most of their stakeholders are in China. It is where their largest manufacturing facility is. Uh, you have Elon Musk having to, going out and saying on the record, we will promote core socialist principles. And the punchline is they are now getting crushed in China because China does not actually want Tesla to be a successful company in China.
Yeah,
So
BYD, right? They're the big electric car
right.
Chinese
And so
native
now,
company.
right. And so now you start to see these show of, okay, well, like BYD or, Cattle, the battery company wants to come set up in the US. Like, oh, well, we're for free markets. I guess we should let, BYD and Cattle come and start to dominate the US supply chains and US EV market and tell Ford and GM, like, sorry, guys, it's a free market. Like that is that is anything but. And so that's an example in the economic sphere. In the political sphere, it is related but different, which is that, for a healthy civil society and market democracy, we rely on the fact that you don't have to say nice things about the government to be treated fairly and be successful. Now,
Oh yeah.
you can complain about ways in which the US falls short of that ideal, but generally speaking, you do not have to toe the party line to be successful in business in this country.
If anything, it's the opposite. If there's a Republican in power, you can go on Twitter as a company leader and call them Hitler, and
That's
you're
right.
doing great.
That's right. Now, in China, that obviously is not true. And
Mm-hmm.
at the extreme, you see the case where like Jamie Dimon makes a joke about the CCP and then has to profusely apologize twice and say it is never right to poke fun at a leader of a government. Um, you see it obviously when, the NBA, it was funny, Adam
Yeah.
Silver, the NBA commissioner, said very explicitly at a conference, like, yeah, we have different standards for, the pressure we put on America. And this is actually not just the NBA being nice, like the NBA boycotting states it doesn't like, even as it goes and does the opposite in China, because we're here to make money. And I think it's really important to remember that for every like overt high profile example of that comes to light are the thousands of examples where the firm that wants to maximize its profit simply does not actually have freedom of speech anymore, if it cares about access to the Chinese market. And I think that kind of manipulation, whether it's implicit or explicit, again, is just inconsistent with the basic values that we want to uphold. And so just as there's this kind of conflict, free markets or free trade, choose one, there's also at the end of the day a free markets or free speech, choose one.
You are simultaneously warning about Chinese sort of top-down control and our need to disentangle from China, which I think even among free traders, the question of China, given what it's doing, given what it does with intellectual property, with security, with the military, I think pretty much everybody, even like Bulldog Dan Mitchell at Cato, will acknowledge that it's not great if you don't have antibiotics during a pandemic because all of them are manufactured in China, or that we can't get necessary parts for our military, that because they're all made in China, our adversary, or just made abroad in general. Where you do push things further is you say yes, we want to rebalance trade, and we want to also do industrial policy, which is to say have the government, have the politicians um, subsidize specific industries for specific reasons, um, that will still be subject to all of our politics and all of our ups and downs of elections. And this time I like the guy, and next time I don't like the guy or the gal. That feels a little like a ratchet towards socialism. And I don't mean to say that to be provocative, except I am being provocative, but not to be like Red Scare. Like, I mean, like literally, it seems like you're saying, let's not be like China, but actually let's kind of be like China. Is that an unfair characterization?
I think so. I think that there's a very good, the question is a very good one. I think the claim that the argument here is let's be more like China isn't quite right. Because I think, if you look at what uh, the focus is on for folks who really like the idea of industrial policy in the US, um, it's ultimately, I think, oriented toward trying to get our markets to operate as effectively as they can. And so I think it's actually very useful to put the trade side of the discussion to the side for a minute, because
Yeah.
it's quite easy actually to say like, well, look, if Taiwan is going to have industrial policy, we're either going to have industrial policy too, or just give up on any industries that Taiwan wants. And so as a kind of almost tit for tat, it makes a lot, it can make a lot of sense. I think it's more interesting in a lot of ways to imagine, okay, well, let's say you had, either, perfect free trade, you had, no one else pursuing industrial policy. It just was the ideal libertarian market. Would you want to have industrial policy then? And my answer is still yes. And it goes back to that point about the deindustrialization and financialization, where I think trade and globalization has been one major policy choice that we made that accelerated that trend. But there have also been a lot of other things, both in terms of policy choices and just other technological trends, social trends that have pushed in that direction as well. It is simply, even if you had no trade at all, uh, globally, if you have just a totally insulated US market, I think you would still see in a lot of situations, it just would not be the case that the kinds of, long-term, potentially high-risk capital investments that ultimately, in a lot of cases, really are so key to human progress and economic growth and so forth, those are typically not actually going to have the most attractive return profile relative to other things you could do with your capital. And we could argue about whether that's true or not. But what I'd say is, like, if we stipulate that that's true, that you have a basic misalignment between those pursuit of profit activities that are going to be most attractive to the private individual versus those that are going to be most valuable to the society, um, then you have a problem. And it goes all the way back to the paragraph where Adam Smith uses the invisible hand metaphor. He only uses it once. And I think, it's an unfortunate metaphor because people hear like invisible hand, that sounds magical. Um, but he wasn't positing some magical force or thing that automatically works out. Really, all he was saying was that, look, if you have an alignment where the things that are going to be most profitable also deliver the kinds of outcomes you want, then when people just pursue their own profit, you're also going to get the good outcomes. And so I see industrial policy as one of the tools we can use to try to bring those things into closer alignment. And just the last thing I'll say is I would emphasize that it has always been a traditional tool of American public policy. I mean, Alexander Hamilton famously was a big industrial policy proponent. Henry Clay had what he called the American system, whether it was investing in the transcontinental railroads in the 19th century. If you look, in the 20th century, the U.S. essentially picked three industries that it was going to invest in heavily, and I would say those were, aerospace, medical technology, and microelectronics. And we poured massive resources into both active public projects, support of private projects, and I think we're awfully glad we did.
This is a very fundamental philosophical and empirical question that you're raising that ends up being ideological in part, because the stories that we can tell about what mattered most, which investments mattered most, if you're being honest, end up having a certain amount of like impossible element. So let me give you an example. The one thing that came to mind as you were talking about this history is the computer industry. And I'll let me lay out a couple pieces of the puzzle for you to respond to. But I think it's important also because semiconductors and the future of AI and where these critical tools are manufactured and therefore controlled is at the heart of a lot of the concerns we have right now. Oh, we're in this AI race, and what's that all about? It ends up being about NVIDIA processors that used to be done for basically improving video game graphics, and now they help ChatGPT do things and train AI models, et cetera, et cetera. When we go back to the birth of the computer industry, I actually started off in computer science. I'm a big computer nerd. It's probably still a third of all the things I read.
Me too. We'll write some code in C to close out the episode. See who sticks around.
Yes, let's compare Fortran. Here is a story, as best I could tell it. Yes, there was government, there was DARPA, there was defense and military funding in particular into R&D and into aspects of what became Silicon Valley. Silicon Valley is there partly because of military bases and et cetera. And Arizona, Silicon Valley, these Texas Instruments, Xerox PARC, which Bell Labs, these were all things that they aren't some perfect free market actor. They had either special monopoly privileges with Bell Labs or other sorts of things. The government was involved. This is what gives rise to things like claims like that the government basically invented the internet. Maybe Al Gore didn't invent the internet, but the government did, the military did. And that's just one piece of the puzzle. And that the homebrew computer club that gives rise to Microsoft and Apple and Andy Grove and Intel and Hewlett Packard and these companies and these individuals operating in a very free market way with relatively little regulation and not as a share of total capital, not that much as a share coming from the government, build this entire industry. And they build it in a way that produces enormous amounts of stuff, including our ability to do this conversation. Everything in this room is all chips and tech. We're talking over Zoom, over an internet that, if you go back 15 years, we were being told the internet could never support the kind of video that it now supports many hundreds of multiples of. And so you have this question of where is the value being added? I would argue, but it is an argument and ends up being ideological, that most of that was private. Most of that was not just private, but also big bets, long run bets in many instances on future technologies. And that aren't just about making quarterly earnings for Wall Street, but are big and substantial and real. And I think you can compare that to failed instances of industrial policy in that sector, like the French that tried to subsidize and protect their own computer industry. And basically they created a coddled, stillborn pipsqueak of an industry compared to us. And so some of this protection, some of this industrial policy seems to me like it's very prone to the same arguments that people like Friedrich Hayek would make about, well, the government doesn't have a central knowledge base to know what the right investment is. It's mostly going to be very wasteful. Some of it will be good, so it won't all be bad. But on balance, it'll probably be wasteful. That's why socialism doesn't work. That's why you can't have a centrally planned economy. Those forces apply to industrial policy. And the historical story about protecting industries or having government prioritize things is messy at best.
So I totally agree with the private sector side of the story of Silicon Valley and the computer industry. I think there's an asymmetry in this debate, though, which I embrace because it is entirely to my advantage, which is that certainly on the right of center, I don't know of anyone who thinks that we should have an industrial policy to the exclusion of a robust private sector, innovative from VC all the way up to major corporations ecosystem. we're just positing that the industrial policy is in fact an important contributor to it. The challenge for the libertarian side is that they have taken the much more absolutist approach, which is in fact, we don't need the industrial policy at all, right? And so I take your point that is ideological on both sides. I would say it is much more ideological on the, we can construct a narrative here where we didn't need that at all, than it is to go with what I would posit a more descriptive narrative, which is like, gosh, both of these things were pretty important. And of course, then you get to the ideological position on the other side, which is, well, markets are bad or make things worse, and this would have even been better if the government did it. And so, I don't want to cast aspersions on libertarians as the equivalent of the socialists here. But since you called industrial policy socialism, I think I'm allowed to in turn suggest that as an ideological matter, it is in fact we don't need industrial policy view that is a closer mirror image in some respects. And so I think I would disagree with very little about the story you told of the computer industry. What I would say is two things, though. One, I think that industrial policy did play a quite significant role in those early stages, where I think you'd say it's awfully hard to envision this getting off the ground or being successful, because there are so many things that markets do so well, but there are some things that markets don't do very well. And that those are critical steps, typically speaking, on an innovation, on the kind of pathway to scaling up these kinds of breakthrough technologies. The second thing I'd say, I'm very curious just your take on this, because I think it's such a nice contemporary example, is that we now do have this CHIPS Act. And we had a situation where the United States had entirely lost its leadership position in what everyone agrees is a critical technology, and in one that, from a comparative advantage, any coherent narrative of trade as well, I think you would say, yes, this is the thing the US should be doing. And we have this CHIPS Act, which costs a lot of money. But, if I look at the $39 billion we're spending on this compared to the $1.7 trillion we spent on the Tax Cuts and Jobs Act for what, as far as I can tell, was less actual increase in investment, it seems to me that the CHIPS Act is going fairly well. And you look at, all 5 major chips companies global chips companies are now investing in the US. No other country has more than 2. You look at TSMC, which is furthest along in Phoenix. Its plant is, already in production, should be at full scale soon, performing incredibly well. You look at all the other investment from other firms that we didn't have to support at all that are now coming in around it. The very successful workforce training that's been, et cetera, et cetera. And I will posit some of that $39 billion will also not work out well, right? For all we know, Intel is going to just collapse altogether. But on balance, it seems to me that having the CHIPS Act has been a good thing, and we are better off than if we did not do it. And I'm just curious how you assess the sort of real-time thing that we are watching unfold.
The thing that I struggle with, first of all, is my own ignorance, right? Like, so much of this involves having to understand proportions in a world where people talk in absolutes. So that makes things difficult just in general. How would we know if it was successful, though? Because when private actors act to invest, they have to deal with the losses. When the government does it, we get this airy-fairy talk of social benefit. Oh, well, we spent this $40 billion. Ezra Klein from the New York Times is out and about with his book, Abundance, talking about how something like $40 billion was put into trying to incentivize and subsidize rural Wi-Fi. And the regulatory process and the 14 steps along the way was such that $40 billion appears to have been spent on nothing. Now, when a firm does that, it goes out of business. But Uncle Sam just taxes us more. So the assessment of public policy when it's in this domain, I guess I would turn the question back to you. How will you know if it worked versus was just corporate welfare that mostly went into other things? Money is fungible. I mean, we put billions and billions of dollars into these universities. In theory, that's a kind of like investment in education. In practice, it's capitalized to subsidize lazy rivers at state schools and pay Elizabeth Warren $400,000 a year to teach one class at Harvard. So where that money goes and whether it's being productively employed really depends on the incentives and the feedback loops and the accountability. And it doesn't seem like government is good at that. Private actors aren't perfect at it, but they do live or die by the P and L, and government doesn't. We're the P, and we end up being the L. So how do you judge if it'll be successful?
Well, one thing you're posing there that is a question, an unanswerable question in all policy analyses is, what's the baseline, right? Like what's the but for case?
Mm-hmm.
And I think it's important to say that that is always a question that in varying levels of good to bad faith, one can undermine any policy debate with, right?
Sure.
Like I could say, sure, it's, great that we had this capitalist system in the United States, but like you can't prove to me that if like, we had adopted communism after the Civil War, we wouldn't be better off. I mean, you have a lot of very good arguments you can make for why that's probably not the case, but you can't prove it, right? Can't
Right.
prove it.
Yeah.
And so I don't know, like why, right? In this case, I think it seems to me quite clear that you went through a 20-30 year period of severe decline in in American capacity in this area. There were no underlying economic forces that would, I think, lead you to believe, well, now suddenly, Taiwan Semiconductor Manufacturing Company is going to decide it needs to be deploying billions of dollars in investment in the US. And the US government decided it was a priority and started moving forward with legislation to support it. And oh, look, well, oh, there's the factory, right? Now, like, can you
Mm-hmm.
say like, well, I don't know, maybe it was because of Arizona's regulatory environment? Like, yes, someone at National Review has tried to say that, but I have to be honest, it doesn't sound a whole lot more compelling to me at that point than like, well, maybe the United States would have been better off if Abraham Lincoln were a communist. Like at some point, you do have to look at the trajectory that you're
Sure.
on
It's
and
fair.
make some reasonable assumptions. Um, so look, maybe the CHIPS Act will fail miserably and we won't get the semiconductor manufacturing back. And I would be the first to admit, if that's the case, that would offer a very serious critique of the idea that government can do that well. There's also the possibility that we do get it, and I think this, I at least this seemed to me implicit in your critique, that we do get it, but so what? How do we know that it was valuable? Like I
That's
think one
part
of
of
the
it for sure.
I think one of the interesting things about chips, that is, the semiconductors that have made it such an interesting case study, is there is such consensus across the political spectrum, even among economists, that like, okay, yes, like there isn't really a knowledge problem here. We've all found a technology that clearly is fundamental to what is going on, what anyone thinks is going to be going for the foreseeable future. Private corporations, to the extent they are deploying their own capital, they think this is this is going to be going
Oh
on.
yeah. I mean, Nvidia is like a $3 trillion. Well, maybe it's not right now, but it hit 3 trillion in market cap. That's a sign of private actors and investors saying this is really important stuff.
Right. Now, flip side, of course, Nvidia doesn't actually make make any of the chips, but point
Yeah.
being that this is, so it could, of course, also turn out that, a year from now, like somebody invents something else out of plastic that is just a better chip, and the entire semiconductor industry collapses to zero. Interesting question then, is that a critique of industrial policy? Because you could say, oh, well, you see, this is the sort of thing government can't anticipate. This is something government couldn't get involved in. That I would have a hard time swallowing, because of course everybody in the private sector thought the same thing, that and so it's true, well, but the private sector is playing with its own money, loses its own money. This is public money. But it's not clear to me how that shakes out as a claim against the ability of policymakers to in fact discern, as well as anybody can, the sorts of things that are probably worth placing bets on. And the last piece of it that I'm curious what you think of this is, I think the knowledge problem critique is highly compelling at the tactical level. When you're talking about, okay, like, how many screws should we make? How much should they cost? How do we get them
Yeah.
from here to there? I think it's absolutely correct that you cannot manage that centrally, or at least not well, and that allowing markets and the price system and the diffusion of knowledge where no one understands it all is going to generate a better result. When the question is, what are the three keystone technologies that will be most important to the future of the United States in the next 50 years? I'm first of all not sure that it's necessarily the case that a bunch of venture capitalists on Sand Hill Road have have any more knowledge or ability to answer that question than um, a set of policymakers. Now, you could posit various reasons why that's where the talent is going to be, perhaps, but as an institutional matter, you see where, like, MIDI in Japan. I mean, if you have the state capacity, as an institutional matter, I'm not sure what the nature of that knowledge is that you would expect to reside on Sand Hill Road rather than with a set of policymakers. And then second, I think you have to cross that with um, who has the set of incentives to get it right. Because on one hand, you could say, from a public choice perspective, like, oh, well, the bureaucrats, they're just trying to keep their jobs and, focus on their personal interest. But that, of course, is true of the venture capitalists as well. And for the venture capitalists, the personal interest is to maximize their return on investment, which bears a very weak correlation to what are the three keystone technologies of the next 50 years. So I'm curious if you see a distinction between those types of knowledge, and whether you think the Hayekian case is I would say much stronger in one than the other.
The argument for and against whether socialism period would work, which is to say, we all own everything and the state basically tells us all what to do and centrally plans the economy. That was the Soviet model by and large. That was Maoist China, 5-year plans, etc. The reason why that doesn't work, the reason why we have no communist success stories, every country that's tried this and gotten as close to the ideal as possible has failed, is because we all have 24 hours in a day, and no individual or team or Politburo or whatever can deal with the millions of decisions being made in real time by the whole of the society to try to figure out what to do next and what should this cost versus that. Should I buy cups made out of ceramic or out of plastic? Should we make more or less of them? Should we focus in this area or that area? There's just millions and millions and millions of decisions to be made. And what the market does, the market meaning private property, voluntary exchange, it creates a kind of real-time evaluation of values in real time. I mean, the best examples in some ways are the hardest ones, which is, why does the price of a generator go up during a hurricane? And why should you maybe not try to stop it and call it price gouging? Well, hurricane hits Miami, suddenly all of the generators are sold out and the price goes through the roof. It is bid up by people that want them. Well, that means all the neighboring states' hardware stores are suddenly shipping voluntarily generators to Miami to take advantage of that totally bottom-up process. That's the argument that we're for those watching and listening that are like, what are you guys talking about? That's what we're talking about here. Decentralized knowledge.
Right.
So your question, to come back to your question, where is the limiting function? Is there a world where, to be perfectly honest, a well-meaning president or Congress acting on behalf of their best assessment of the voters' current opinions, whatever they're worth, how is that much different than Mark Andreessen placing big bets for where the future will be in 50 years? The answer is probably we don't know. It's not trivial that one is spending private money that's been voluntarily given and the other is spending other people's money and won't be accountable to it. That's kind of a big deal. And it's not to say we should live in an anarchist society where there's no such thing as taxation in government. But I think that my understanding of the fundamental American premise of the way our Constitution was constructed and the constraints on power, the separation of powers, was to say, look, the monopoly of the state is a very peculiar and particular thing. Its ability to tax you at gunpoint, not directly, but indirectly at gunpoint, is a very particular power it has. And we should constrain that. The Bill of Rights is Congress shall pass no law, X, Y, Z, for a reason. And I think that is where I struggle the most here in this kind of conversation is I tend to want to go to a place of, well, what is the limiting principle so that we don't have a forever creeping, hey, look, market failure, therefore government. And then, because that's very, very easy. At any given moment, there's something going wrong, and we could opine about how there's market failure, therefore government. Oh, how could there be a market for used cars because of asymmetric information? I don't really know as the buyer how you've treated your car. Maybe you've just hidden the damage. But then it turns out that's bullshit because there is a used car market and there is all kinds of mechanisms that came about because people want to buy a used car. And so it turns out, oh, you have third-party certifiers. I mean, like this kind of market failure economics would have surely said that eBay is impossible. Oh, it's got to be a market failure. Who's going to buy somebody's used crap anonymously? There's no chance that's going to be rife with fraud. But eBay still exists. So I guess I am sort of playing a little, I'm being deflective here, but not to be obtuse. I don't know.
Yeah. No, it actually it sort of it brings us back to concluding at where we started, which is in an interesting, what I see as distinction between libertarianism and conservatism, because I think for libertarians, the sort of the question about the limiting principle and the sort of very strong bias against government action and perspective of what government does as effectively taxation at gunpoint and so forth is obviously very central to the libertarian ethos and conception about and hesitancy about government action. And really from a conservative perspective, I would say about the capacity to, use government to advance the public interest at all. I think what I would call the more traditionally genuine orthodox conservative approach is much more rooted in prudence and a prudentialism that recognizes that we are not going to get anywhere if we are not able to make some collective decisions about some things. And that the key question is not how do we absolutely minimize the need to do anything collectively, but rather how do we identify those situations where we would benefit from acting collectively and make it possible to do so. And that again, that doesn't then go to the other extreme of collectivism, obviously, as an end unto itself. But it likewise recognizes that the absence of that the individual liberty at all costs is not the end unto itself. And so seeks to chart a course on economics that is between those two things and takes more seriously places where we think probably the market isn't solving things on its own. Yeah. And has some belief that as messy and as imperfect as government action is always going to be, private action is also messy and imperfect all the time. And so it is at the end of the day the role of, if you want to sound classy, you say the statesman. If you want to sound derogatory, you say the bureaucrat. I think these are the same. These are the same thing to some extent.
Yep.
It is ultimately, there are a lot of situations where you are going to want to have the statesman or bureaucrat to play a role.
We started our conversation with what you're endeavoring to do with American Compass, and at the center of that was some things that are not economic, about the family, about the community, and I think also about the culture. And I think I'm making libertarian arguments, and it's certainly a bias I have, but these things which are non-market aspects of life. I mean, I'm also a Catholic, and frankly, that's probably the ism that matters the most to me. And I don't think we are ultimately, I think our happiness and our sense of purpose in our life, there are a lot of Americans in crisis when it comes to happiness and family and purpose, feeling needed, feeling connected. And I think the most devastating critique one can level at capitalism and free trade in our moment, it can sound a little Marxist, and so be it, but it's that we have become a highly materialist and increasingly alienated culture, atomized. I believe this is true. I believe that it's something that has been brought about by our technology, by our wealth. I don't know if reversing course on some of these things will fix it, but it's not clear what will. How do you think about the bigger picture here of the family, of purpose? You know, conservatism is about, you know, many things, but one way to think about it is looking at the traditions that have upheld the have worked for millennia, the Chesterton's fences of our society, and saying the West is built on these things, on family, on loyalty, on virtues that aren't just about global free market exchange, but about other things. What's the total program moving forward, and where do you think we are with what the president's doing, and what comes next?
Well, I think I'm the first to acknowledge. That was, you said it better than I would. So to some extent, I want to just agree. I think enormous elements of these challenges are outside of the realm of economics and markets and policy altogether. And I think it's always sort of very important to acknowledge that. At the same time, I think there's been a tendency, not on the philosophical, but the political right of center, to use that as an excuse. And sort of, it drives me nuts when people use the phrase, that's a culture problem, as if that therefore absolves us of the need to think about ways in which policy does intersect it. And so, for me, the most interesting question is, okay, but what are the things we can do something about with the tools we have? And so I always, highlight the example. One thing we're known for at American Compass is doing a lot of work on organized labor. And that would be a whole other podcast, everything that is good and bad about organized labor. But one thing I point out about it is that we spend on the right of center so much time talking about civil society and these mediating institutions, and then we kind of shrug and say, like, well, you can't pass a law to tell people to go to church and move on. And there's this one incredibly important element of civil society and mediating institution, especially for the working class, that is a feature of policy choices, and you could do something about. And so at least as conservatives, I think we have an obligation to look really seriously at, like, is there a labor movement and a form of worker organizing that we could support, that we think would on balance be good, because it has potential. There are things that are good about it. Catholic social teaching obviously is very enthusiastic about it. And so, whether it is that, whether it is this question of deindustrialization and trade, education, and I get very frustrated by the sort of standard right of center view of education, which is sort of just like, well, school choice, and that solves it. And to be clear, I think we need more school choice. But I think when we think about what we need our public education system to do, what can it do well versus what can't it do well, what do people really want from it, we need to radically rethink how we again use this tool that is something that we come together collectively to do, to actually prepare people to build decent lives. And so for me, where it sort of hits bedrock and I find so fascinating just in a matter of economic thought is I just like asking what are the set of things we want markets to do? Because we have to recognize there are a lot of things that we need as people that we need for human flourishing that any nation is going to demand. And if markets don't do it, the state is going, our politics is going to lead to a place where the state gets inserted. And I would much rather have markets solve as much as possible. But I think that has to come with an acknowledgement that markets don't do those things automatically. The thing markets do automatically is, right, like prices and efficiency. Um, Maybe even stipulate maximize consumption, although I doubt it. But if there are all these other things we want markets to do in terms of providing job opportunities, spreading opportunity widely, driving productive investment, then that's the conversation that we should be having, defining what those things are and thinking about what pieces of it markets will do naturally and what pieces of it public policy has a role to play in shaping.
It's very easy to say we as Americans. It's rhetorically powerful. What do we want? But I think one has to contend with the fact that there are not one set of ranked order preferences for we the people. And that even when you poll people, what you often get are opinions that are changed on a dime with very little additional information, because most people, again, this is not to say people are dumb. People aren't dumb. People are very smart in the areas where they put their focus, and all of us are ignorant about almost everything. So the question of what we want, where does that have its limits for you? Because there's multiple we's and there's competing interests at all times. And we are 340 million very diverse people, diverse in a lot of different ways, ideologically, geographically, urban versus rural, um, you know, along a million dimensions. I'm very impacted by the work of Charles Murray in the book Coming Apart. I mean, there are like lots of Americas. There's not just one. So how do you think about what we means when you use that term?
Well, one piece of it is I think we can do a much better job in looking at what people's preferences are and what they want at the level where they have those convictions. I think it's a great point that so much of our polling is like ask technical policy question one way, get one answer, ask technical policy question the other way, get the other answer. One thing that we've done a lot of at American Compass that sort of seemed obvious to me, but has become quite distinctive because it's just not done a lot, is to try to survey questions one level down and think about like what are the sorts of trade-offs that people do grapple with. So, we did a lot of surveying on education, asking people, which of these do you see as the real purpose of public education that you care more about? Asking people questions like, would you prefer for yourself or for your child, the best possible career far from home or a good career close to home? Like these kinds of questions, I think, help get at the actual things that are motivating people. And I think in my mind, it also speaks to the question of like, what is populism? Because populism can be denigrated as like, oh, it's just, being beholden to the masses. Get to the flip side where it's like, well, if populism is just doing whatever is popular, then you just mean democracy. But it seems again to me that there's this distinction between means and ends where I think, elected leaders, technocrats, experts do have a superior ability to devise means and understand the kinds of effects different policies will have. But I think they have to do that in service to the ends that the public express and prioritize. And so, if the public says, we really have a lot more concern about the strength of the industrial economy and the diffusion of opportunity across the country, even if that means something else for growth or cheap stuff, that's an inherently valid preference. You don't have a sort of technocrat's ability to override that. Now, even then, I'm still using we, and so I'm coming back around at the end to address what LB comes down to, in my mind, is this same question about what is going to be done collectively versus what is going to be done individually. Because inherently, if you feel like a collective approach to addressing something is the best one that is going to deliver the best outcome, one of the trade-offs of that is it means there is going to be one answer and not the one that everybody wants. And that's one of the reasons not to do it unless you have to. And so for me, it comes down to less kind of who is the we and more what are the things that we, at whatever level of single answer you're going to have to do it at, ultimately are going to benefit from having the single answer, even if it's not the one that everybody wants.
Yeah.
And that those are the things that it is appropriate to use public power for. And what those things are, at the end of the day, that is what politics is. And voting about it is the worst possible approach, except every other one we've ever considered.
You raise really important points. I think the question of will any of this work towards the ends you've articulated is an open one. There's plenty of counter examples, right, of things that, hey, we put tariff on X, we get retaliation Y, like we put tariff on automobiles, we get retaliatory tariff from China on soybeans. We're suddenly charging the taxpayer to subsidize soybeans. That was 2018, last time Trump was doing this kind of stuff. So there's a lot of winners and losers in all this. I think that the notion of how do we orient priorities in the country towards the good and towards flourishing is an area where we can lock arms and agree and say that I want that too. I think that economists have done a great disservice to the argument for free markets by hand waving away the concerns that are cultural, but everything's cultural.
Yeah.
My rank order of subjective preferences that gives rise to my demand is a cultural question. What do I like more is a cultural question. And so my last question for you, we call this show Dad Saves America. I love America. I want America to succeed. I want it to be a place for human flourishing. I think being a father is a role that we play that does that. How do you think about your role in your work and in your life in this American story of ours?
Well, that's a challenging question. And I guess it's one thing I would say, and it's implied in the question is there are two such distinct answers to that. There is how one lives one's own life. And I think, for me, and I've spoken about this in varying contexts. Actually, a lecture I did for First Things in particular, because I've always been amazed. I'm a secular Jewish kid growing up, and ended up landing at almost the same place as virtually all of Catholic's social teaching, despite not having been raised in that tradition at all. But I think ultimately I would describe as an obligation to raise the next generation is obviously extraordinarily micro. You are going to have effect on only a few people directly, but has to be elevated to every bit as important as whatever the scale impact one can have in professional life is. Because if you don't do that, the professional scale is always going to triumph. But if everybody did that, you wouldn't have the next generation. The only equilibrium is to give most focus to the first. And professionally, for me, I am incredibly fortunate to get to just work on ideas all day. I'm one of these people who believes ideas matter, and that these kinds of good faith debates and arguments really do lead us in a better direction. And so finding ideas I think are wrong and picking fights about them, putting forward ideas I think are right, showing ways to translate them into policies that hopefully do more harm than good, is I guess my little corner of the world. And I love doing it.
Well, Oren, I hope to have you back. Thanks for being on Dad Saves America.
Thank you very much. This was so much fun.